Good morning everyone. Today, we will cover Chapter 12 on Group Audit. What is Group Audit? Generally, Group Audit is defined as an audit of group financial statements, and financial statements are group financial statements when they contain the financial information of more than one component. Group Audit is used to present the consolidated financial statement of the holding company and its subsidiary as a whole. This group audit require a relevant accounting standard of MFRS 10. The standard require the consolidated financial statement of the group performance as a single operation. For example, Company A acquired 80% of holding interest in Company B. Then, this Company A will be considered as holding company and Company B as its subsidiary. This is because Company A hold more than 80% control over the Company B. Therefore, Group Audit will present the result of group financial statement of individual members and eliminate all intercompany transaction and balances. An intercompany transaction here means that any transaction between the parent company and its subsidiary must be cancelled off against each financial statement. By using previous example, Company A and Company B, Company A which is parent sold goods to Company B, the subsidiary during the year. Any unrealized profit from the sales will be eliminated in the parent company. There are few matters to be considered before accepting appointment as principal auditor. Firstly, is the ability to perform certain tasks on group audit in which to enable them to act as group. Secondly, the degree of their knowledge regarding the business of the subsidiaries and its environment. Thirdly, the nature of their relationship with their component auditors. Lastly, risk of material misstatements in the financial statements of the subsidiaries audited by component auditors. There are also special consideration of planning and controlling group audit. Under ISO 600, an establishment overall group audit strategy and audit plan is done by group engagement team. The overall group audit strategy and audit plan is reviewed by group engagement partner. It is also for the direction for the group audit engagement. Okay, now, let's see the relationship of the principal and other auditor. Principal auditor is the auditor that is responsible for auditing the financial statement of the holding company. They also report the financial statements of an entity that include financial information of one or more components, for example, subsidiaries, joint venture and so on that audited by the other auditor. Meanwhile, the other auditors is the auditors that other than principal auditor, for example affiliated firms in which a firm being close formal association with principal auditor, and unrelated firm. Other auditors is responsible to report on the financial statements of subsidiary and sub-subsidiaries' financial statements.
Okay, so let's take a look on responsibility of primary and secondary auditors, and liaison with other auditors. Responsibilities of primary auditors. Firstly, primary auditor are responsible to audit both holding companies' financial statements and consolidated statements. Secondly, primary auditors need to obtain subsidiary financial information, as reasonably acquire them to perform duty as auditor of group financial statement. Thirdly, primary auditors are responsible to access to the accounting and other records of subsidiary company. Primary auditors are also responsible to obtain information and explanation from the officers or auditors of subsidiary company and related company. Lastly, the primary auditors must inform the secondary auditor in advance of the standard and scope of work required, and any reporting deadlines to be met. While the responsibilities of secondary auditors are, first, they are responsible only to audit respective subsidiary companies' financial statements, or sub-subsidiary financial statements. They are also responsible to be prepared to cooperate with primary auditors, and make available of subsidiary financial information, as primary auditor acquire, and secondary auditors also need to discuss with primary auditors on problems that may lead to delay in reporting, or to qualification of his opinion as soon as problem arise.
Next, matters to be considered when using the work of other auditors. Firstly, the independence of other auditors. Secondly, the competency of other auditors includes professional membership, ethics, training and audit methodologies. Thirdly, communication at the planning stage regarding the accounting, auditing, legal requirements and areas of significant risk, as well as areas of special consideration, such as intercompany transaction. The next matters need to be considered is the work of other auditor, whether there is sufficient appropriate evidence. The auditor also need to take into consideration on the risk of material misstatements at group audit. Next, the procedures to be performed when using the work of other auditor. First, inquiries and discussion with other auditors on the planning to use work of another auditor, and principal auditors should consider the professional competence of the other auditor in the context of specific assignment. Secondly, discuss with the other auditor on the audit procedure applied. And lastly, inquiries and discussion with other auditor and management of component or subsidiary regarding the audit findings or other matters that affecting the financial information of the component.